Hello and welcome to TNM TV News. I'm John Cumming, editor of the Northern Miner. This week we have a special presentation from Mining Markets editor Alicia Hyatt, who catches up with newsletter writer Mickey Fulp at the recent PDAC convention in Toronto. Alicia asks Mickey to comment on the big picture when it comes to investing in the ongoing commodities boom.
Mickey, you were an exploration geologist for about 30 years before you decided to become a newsletter writer. When did you make that switch and why?
I made that switch about 3 years ago, and I have over 30 years, as you mentioned, and about every 5 or 6 years I seem to reinvent myself in the business and go to something new. And I've been a part-time analyst for quite a while, and I just said maybe it's time to do this full-time.
I'm getting the sense that everyone is a little bit more optimistic about the investing climate right now. Would you agree with that? And if so, do you think it's too soon?
Well, most definitely. You know, a year ago at the PDAC, we were just coming out of the crash. Now we're starting to make a fairly good recovery, but our business really tracks the price of gold. So when we have a robust gold price, we have a robust stock market, and a robust venture exchange stock market leads to something like we have here right now, which I think is something on our 23,000 mining professionals at the PDAC this year.
You've said recently that you're bullish on gold, but you're not a gold bug. Can you tell me a little bit about that distinction?
Yeah, sure. I've been a gold bull for quite a number of years because to me gold is money. It is the only money. But I'm not a gold bug. I generally have looked at the gold bugs over the course of 30 years in this business, and they keep predicting these astronomical prices of gold, and it's after a while you say, show me the beef or give me some evidence. They've been wrong time and time again, yet the predictions stay the same or even go up on the price of gold. So to me, gold is money. Gold is not an investment. Gold is not a speculation. Gold is a safe haven where anyone of means should have at least 10% of their net assets in physical gold.
What about other commodities? Are there other commodities that you're bullish on or would warn people against investing in?
Well, I'm very much bullish on most commodities because I think we're in a secular bull market for commodities. Secular meaning a once-in-a-century sort of bull market that could last, well, we're something on the order with a rising gold price, rising commodity prices, 6 or 7 years into that now, and I could see it going another 10 or 15 or 20 years, and that's basically driven by demand from China and India and places that are starting to develop middle class. To answer your question more directly, I'm very bullish on copper. I was a short-term bear in copper a couple of months ago. It made its correction, which we predicted that correction, and now it's well on its way up again. I'm not so bullish on lead and zinc and some of the other base metals, but iron ore, very bullish on iron ore, very bullish on agricultural minerals, and oil business is booming once again. So we will, within a secular bull market, have dips and bearish times within that, but I think overall the trend for commodities over the next 20 years, say, is very robust.
You're writing a book for lay investors right now. Can you tell me a little bit about that?
Yeah. I'm a retail lay investor myself, and I've witnessed over the course of doing this over 20 years in the junior resource sector that the big boys make the money, and oftentimes the little guy gets left kind of holding the bag. So the little guy is not always blameless in this. In fact, he usually is fully to blame because there's two things that motivate investors: greed and fear. And fear comes in when people are greedy enough that they don't want to miss the next big thing. They're fearful of missing the next big thing. So oftentimes they come in at the top of the market. What I'm doing with my book, it's a primer for the lay investor, and it's a series of chapters which mostly are being published chapter by chapter in my newsletter, but at some point will be bundled up into the book, is to try to educate the lay investor to do his own research, to make his own investment decisions, to not throw darts at the board based on something that a newsletter writer tells him: buy this, sell this, when to buy, when to sell. He does his own due diligence, his own research. He makes better investment decisions. He makes money in our market. Because he continues to make money, he puts more money into it, leads to higher liquidities, higher volumes, higher market caps, and a more robust stock market, meaning it's a win-win situation for everyone. So that's the goal of the upcoming book.
You pointed to one mistake that lay investors make, which is depending on other people to tell them what to invest in. Are there other mistakes that they commonly make?
Well, they do. They make many mistakes, and I think it's basically because they don't understand the three key criteria of investing, especially in junior resource stocks, and that's share structure, people, and projects, the three key criteria. So you want a tightly held share structure, you want people that have had experience in the junior resource sector running the company you're considering investing in, and you want to make sure their track record is positive and not negative. And then you want to pick a company that has the proper flagship property, and the way you evaluate that is, can the junior develop it within its half-life timeline, because most juniors have a life of something on the order of maybe 5 to 8 years, and most of them fail within that 5 to 8 years. You want to make sure that they have the financial wherewithal to advance the project, and most importantly, you want to make sure that their project, they have multiple exit strategies where they can reward their shareholders.
Did you want to share any of your successes or regrets with us?
Well, I will tell you that over the course of the past year, I've covered something on order of 8 companies, and all 8 of those companies have more than doubled from their low when we recommended them to the high that they eventually reached. So that's the goal of my investing philosophy, is a double within 12 months. And when you get that double, you sell half your position, you take all your money off the table, then you are playing with somebody else's money. And you have a zero cost basis, and you still have half your position to play further upside in the stock. It is an infallible way to make money in a bull market, which we are very much in right now.
Thanks, Alicia. Keep watching for another episode on Bill C-300 and another profile on a Canadian Mining Hall of Fame inductee. Thanks for watching. Bye-bye.